Pablo, good to see you. How you doing? How you been? Joe, good to see you as well. Evening, how you doing? How you been? Free and Feather, good to see you as well. How you doing? How you been? Good evening. Comatose, hey brother Miles and CMF, good to see you as well. Comatose, how you doing? How you been, brother? Okay, by the time everyone's tuning in one by one, we'll go through the intro, the disclaimer, and what we're going to be talking about on tonight's live. There's a few things happening around the world that everybody should be aware of. One of them obviously being the tariff situation that's going on right now. It's came back. That's why the market seems interrupted, because we don't know where we stand with tariffs right now. There's obviously the other political situations that are going on as well. Elon Musk creating his own essentially campaign party and some other things that's happening around the world. Some having essentially impacts on market spaces, some interesting timelines, I would have to say. But we're going to go through them on tonight's live. Obviously, we have Ripple news to go through as usual on tonight's live as well. But let's do the intro. Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family, and my name is Miles. I host this live that you're watching right now. You can tune into this live Monday to Friday, 10 p.m. London time, into this live where I essentially share the most recent news on cryptocurrencies, CBDCs, AI, politics, and Web3. Pretty much everything you need to know about regarding this world transforming into this digital space that we're heading towards right now. And we also do Q&As on this live as well, which means if you do have any questions or essentially statements to make, put them down in the comment section. I'm more than happy to help you out. And a disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, welcome to CMF Live. If you're watching for the first time ever, if you're a regular, let's go CMF. We are on episode 328 right now, which is incredible that we're on that episode. And also, just want to take 1 second to say thank you so much to everybody from the CMF who has tuned in and liked this live and retweet this live if you watch this on X. And thanks so much to everyone on YouTube who's watching right now from the CMF who's also liked the live as well. Now, before we go through the first news on tonight's live, which is regarding the US tariff plans, which is something that everybody should know about, let's go to the comment section first. Let's see where we're at. Artistic, hello Miles, and CMF, good to see you as well. Artistic, how you doing? How you been? Theos, hi Miles, how are you doing, man? I'm doing great. Theos, how you been, brother? How's things? Adi, hi Miles and everyone in CMF. I hope everyone had a great sunny weekend. Let's go, Adi. Good to see you as well. Funky brother. Good evening, Professor Miles, the CMF family. Let's go, Funky brother. How you doing? How you been? How you been? I've been doing good, brother. XRP pumped a bit, then again back down again. It's just how the market is right now. The market is a bit staggered on the whole tariff situation, also the Japanese situation as well, where Japan is struggling right now to maintain its country. So therefore, they're thinking about dropping their US debt. Now they hold the equivalent of 1 billion or 1 trillion amount of US debt. If they do drop on the market space, it's going to put a massive hole in the US, and the US could essentially put more pressure on Japan. So there's that situation going on right now. But it's the market. The market right now is a bit staggered due to tariff situations and due to a few economies not doing too well. But if those economies move faster and bring in the clarity that we need for cryptocurrencies and the regulations that we need, then liquidity will be provided to those economies if they just move fast enough. Good evening, Miles and CMF. Bull XRP, good to see you. How you doing? How you been? Morning, Miles and CMF. Shelly, good to see you as well. Morning, how you been? So, first news on tonight's live. Regarding US tariffs, here it is. US tariffs essentially plans impact market reactions, and crypto implementations are happening right now. So today, on July 8th, 2025, the White House has essentially announced a consensus approach to essentially renewing the trade agreements impacting economies and financial market spaces right now. The US announcements regarding new tariffs, a key trading partners, has led to the market's uncertainty right now, and notably affecting both traditional and cryptocurrency market spaces. Initial announcements on July 8th have sparked immediate concerns across global markets. The White House signaled new 25% tariffs, possibly on Japan and South Korea, scheduled to start on August 1st. President Trump emphasized fair treatment for the US in trade matters, pivotal to this decision. President Trump has sent a trade letter to Japan and South Korea, essentially stating that a 25% tariffs will be imposed on both countries starting essentially August 1st. These measures essentially align with historical practices used for negotiation, essentially leverages by Trump's administration. Noteworthy international players like Ursula von, the president of the European Commission, have voiced reactions to ongoing trade strategies. In fact, Europe at one point thought, because of the trade situations that are going on, the tariff battles with Trump and the rest of the world, Europe thought to themselves, maybe this is the time for Europe to essentially take the lead and essentially, become number one by passing over the US. The effects of the announcement essentially protrude beyond conventional market boundaries. Major US stocks indexes face declines on this news. The Dow Jones essentially is 1.13%. Simultaneously, the crypto markets observe significant whale activities also, such as massive Bitcoin deposits to Binance and a speculative shifts that's going on right now. Institutional maneuvers like these can signal broader market sentiments or even emerging strategies influenced by expected policy outcomes. Market reactions involve key finance leaders expressing apprehensions. Economists anticipate changes in industry stance and government responses. Official White House transcript indicates that potential adjustments to these policies with an extension to tariff deadlines already in place. As official negotiations move forward, responses from both crypto traders and traditional financiers are expected. Scott Bessent, the U.S. Treasury Secretary, will essentially unveil significant trade announcements affecting tariff policies within 48 hours, directly impacting the global trade dynamics. So we should be expecting within 48 hours something to come out of the White House regarding tariff plans. All we know is that Trump's administration is sending some letters to South Korea and Japan regarding a 25% tariff. We don't know what the rest of the tariff plans are going to be. Are there pauses, or they're not pauses, or what's the increases, for example, or what essentially trade agreements have already been made. The U.S. Treasury Scott essentially Bessent has confirmed the upcoming major trade policy changes. President Trump is directly involved overseeing the process, touching on the past similar announcements and have historically essentially affected global markets. Financial markets may experience heightened volatility due to the potential implementations of these new tariffs. Political reactions could vary globally as these changes take effect. Historical context also suggests an impact similar to past trade tensions. Market dynamics, particularly in sectors heavily reliant on imports, may evolve due to changing tariff structures. Such developments could influence the dollar strength and essentially indirectly affect cryptocurrencies. Monitoring officials and expert channels is advisable for further insights, and the trade tensions historically have correlated with increased risk sentiments in markets, prompting shifts in both equities and cryptocurrencies. Scott Bessent's announcements may proceed similarly, potentially affecting trade relationships and macroeconomic trade essentially globally. The August 1st implementation date has not mean the 90-day tariff pause has been extended. It's not a new deadline. We're saying essentially this is what's happening right now. If you want essentially things to speed up, and have at it. If you want to go back to the old rates, that's your choice. Essentially, those were the exact words that came from Scott Bessent of, essentially, this is where we stand. This is not an extension on the tariffs. We're not pausing the tariffs. This is just what we're saying. By then, everything should be sorted. If not, then expect heavily being tariffed on your own jurisdictions, or they can go back to whatever their agreement previously was. So that is one thing that right now is essentially affecting the market space. It's affecting the stock market space and the crypto market space. Bitcoin, unfortunately, still reacts like a tech stock instead of a safe haven or a risk-off asset, which some people may presume it is. In reality, it's never reacted like a risk-off asset for some reason, but it's yet earned the title of risk-off asset. Gold, on the other hand, is actually doing pretty well for itself. Now, it's not all doom and gloom regarding the tariff situations or the trade battles. The White House is going to release the first crypto policy report. So we're going to get the first ever crypto policy report from the White House, which is quite big news, to be fairly honest. So here it is. The White House Digital Assets Markets Working Group, chaired by David Sachs, prepares its first crypto policy report for the release on July 22nd, 2025. This initiative aligns with the Executive Order 14178, aiming to create consumer protections and technology-neutral regulations. The EO 14178 emphasized the need for clear and consistent technology-neutral regulations to foster innovation and protect consumers in this space. The working group consists of leaders from 11 federal agencies, excluding essentially excluding traditional banking regulators. This regulatory shift follows the essential revocations of prior Biden's era policies emphasizing clarity and innovation in the digital asset sector. The establishment of a strict Bitcoin reserve indicates the federal government's potential entry into the digital asset market. Such moves essentially could prompt increased institutional activity, influencing market dynamics for Bitcoin and other major cryptocurrencies. These policy shifts could significantly affect financial markets, potentially increasing risk appetite and capital flows. The administration's discussions may redefine streak, essentially economic streak related to digital assets, particularly impacting Bitcoin. The announcement of the end of the Operation Chokepoint 2.0 marks a turning point in easing restrictions for crypto entities. This decision could facilitate improved banking access, influencing broader market conditions, potential essentially financial consequences, including enhanced liquidity and market participation, particularly for Bitcoin and cryptocurrency in general. Due to the federal interest, regulatory clarity could also drive technological and investment growth, benefiting both industries and consumers. So we're about to be getting essentially a White House crypto report, and it's going to be regarding the clarity essentially of cryptocurrencies, where they stand, security, not security, everything that essentially has always been a burden, or we've essentially hit a stop because of what the SEC thinks about cryptocurrencies in the past and so on. Everything should be resolved regarding this EO of 14178. We just have to wait in for it to come out. Now, just to keep that in mind, 14th of July onwards is going to be known as the Week of Crypto, which is essentially announced by Trump himself. The Week of Crypto is going to be all about the Clarity Act, the Genius Act, and another act that's going to be helping cryptocurrencies with the banking essentially side. But this is now, again, July 22nd, we're going to get more news on cryptocurrencies coming out the White House. So a lot of crypto regulations, you could say, discussions and implementations are virtually in this month. Now, moving on from the White House crypto policies, and it's good to see that, because a lot of people inside the crypto space might have assumed that we're going to be far away from crypto regulations this year. But by the looks of it, July 14th is going to be known as the week of crypto regulations. July 22nd is when we get the White House report coming regarding cryptocurrencies on crypto regulations. So we are in the year, and also you could say even in the month, of crypto regulations. Now, BitGet's CEO has decided to explore the potential of crypto pensions in Central and Eastern Europe. Now, we've talked about cryptocurrencies entering every aspect of people's lives. We talked about cryptocurrency loans, borrowing against your assets, skipping on tax, but obviously in a very legitimate and legal way, and so many of the things that cryptocurrencies have come back, or even borrowing against your ETFs, which is something that's happening on Wall Street now, right now, from one firm. Pensions has also been happening inside the United States as well, where essentially Wisconsin invested into Bitcoin ETFs through BlackRock and also Grayscale for pensions, and they did a substantial amount of money. We're talking about the millions right now. But BitGet's CEO is now exploring how more can we, push cryptocurrencies into our everyday lives. And even Binance a few nights ago, essentially, I think it was on Friday or Thursday, I revealed that Binance is thinking of a plan of how to do inheritance when it comes to cryptocurrencies. So this is great to see how crypto is, attaching itself to our everyday life and more into the traditional financial system. But here it is, BitGet CEO's new plan. BitGet CEO essentially has addressed the possibility of having an alternative to traditional pension systems in Central and Eastern Europe, highlighting the benefits of crypto pensions. BitGet is one of the most important crypto exchanges in the world and a leading Web3 platform. In a recent interview with the Romanian publication, BitGet's CEO addressed the benefits of an alternative to traditional pension systems by using cryptocurrencies. She noted that the Central, essentially, and Eastern Europe is a region in which crypto and blockchain technology adoption are pretty much on the rise and has high potential for diversifying financial options. Chen said that in the long run, a crypto pension means saving and investing long-term in digital assets following the main targets, generating income and providing financial stability. BitGet CEO highlighted that the implementations of a crypto pension system does not necessarily mean eliminating the existing traditional system, but it's a viable alternative or even an upgrade, offering higher control over how people administer their personal, essentially, savings. The concept has already started to gain traction in other regions of the world and could become a reality in Central and Eastern Europe as well, especially among young people who are getting more and more tech savvy. Implementing such alternatives to traditional pension systems depends on the following factors: regional regulations for crypto and blockchain, and level of financial education allowing users to invest responsibly through essentially their terms. According to BitGet global report, including 30,000 participants, 20% of Gen Z and Alpha people are open to receiving crypto pensions when they retire. 20% out of 30,000, 20% out of 30,000 participants is quite a high number of people that will prefer to essentially have crypto pensions than having the traditional pension system. One of the main reasons for this choice is the fact that younger people lack confidence in traditional pension systems and are currently looking for viable alternatives. Chen highlighted that such a lack of trust comes from more factors, including economic and demographic uncertainties, inflation, and market instability. Gen Z and Alpha essentially are currently living in a world pressured by traditional financial systems sustainably and looking for other alternatives that could offer them a better and safer future. A new financial system that includes crypto and blockchain technology could essentially boost people's confidence in a viable alternative by offering more transparency, flexibility, real-world applications of new digital era. Hybrid solutions blend the state's guarantees and traditional systems and with innovation technologies like crypto and digital wallets, and can easily become a bridge between old and new financial systems. Education is very extremely important in this regard, and more people, essentially, with more people better understanding these innovations, the more trust they will have essentially using them and benefiting from the real world advantages. Chen also highlighted the raising essentially crypto of blockchain adoptions in Central and Eastern Europe as digitalization is growing in the region, as well as the interest in new and useful alternatives to traditional systems. So if you are someone that essentially was looking for somewhere down the line a pension fund to be created, or if you already do have a pension fund essentially and you do live in Europe and you might be looking for an alternative for your pensions, well, BitGet CEO is about to be opening the doors to the European market space for crypto pensions. So if you're someone that does have a pension and you do live in Europe, you could very soon have access to crypto pensions through BitGet. Now, which I think most people would take as an option any day. I think most people would rather have their pension money in XRP than have it in traditional bonds or the S&P 500. Now, what we're going to be talking about next is a company that everybody fully knows about. It's a company that we've always talked about on this live. And that company is MicroStrategy or Strategy. And Strategy is known for buying Bitcoin no matter what the price is and continuously buying Bitcoin, which started a debate on X of where Strategy or Michael Saylor gets his money from for buying a tremendous amount of Bitcoin at all times. Well, seems like for some reason Michael Saylor has stopped or pressed the pause button on buying Bitcoin. Strategy pauses Bitcoin buying and essentially focuses on new funding channels. Nasdaq-listed firm Strategy, led by Michael Saylor, has paused its Bitcoin purchases between June 30th and July 6th, as revealed in the new filings. This marks the first time the software intelligence firm has not added its holdings since early April. Despite the pause, Strategy remains the largest corporate holder of Bitcoin. As of July 6, Strategy holds 597,325 Bitcoins, valued at over $65 billion. The average purchase of these coins is approximately $70,982, with essentially a total acquisition cost of $42.4 billion. This puts the company's unrealized profits roughly at $22.6 billion. Strategy's Bitcoins holdings now represent about 2.8% of the total 21 million Bitcoin supply. The pause in the Bitcoin purchase comes after a period of aggressive acquisitions. The Virginia essentially based company has bought 4,980 Bitcoins for $531.9 million between June 23rd and June 29th. However, the pace has slowed down recent weeks. This comes as the firm shifted focus from selling common stocks to offering essentially preferred stocks to raise capital. In late essentially June, Strategy raised $6.8 billion through its at-the-market equity programs, which essentially included a sales of Class A common stocks and various types of preferred shares. The company's capital raising efforts support a long-term plan called the 4242 program, which I revealed a long time ago, which essentially aims to raise $84 billion for Bitcoin acquisitions by 2027. This is a double the original target under the earlier 2121 plan to date. Strategy has raised billions by selling shares and convertible notes, with additional funds still available through its ongoing essentially programs. Furthermore, the firm's market value has reached roughly about $110 billion, which is significantly higher than their net asset value of its Bitcoin holdings. Some analysts believe this premium is justified due to the company's strong equity in Bitcoin cycles. Others, however, have raised concerns about the possible negative feedback loop from overdependence on Bitcoin's valuation. A recent class action lawsuit also claims that Strategy has misled its investors about its Bitcoin strategies. Strategy recently released the second quarter results and reported unrealized gains of $14.5 billion in its BTC holdings. During the second quarter, Strategy also entered into a loan agreement allowing borrowing up to $31.1 million for capital purchases. Meanwhile, other companies like Metaplanet are also adapting similar Bitcoin strategies. Tether-Back21, Trump Media, and GameStop are also among the new entrants following this trend. And following this news, Strategy stocks essentially closed at $403.99, up about 0.4%. I just want to point out one thing. It's interesting that MicroStrategy has stopped buying Bitcoin roughly at the same time when they're being sued by a class action lawsuit. A class action lawsuit started on MicroStrategy because MicroStrategy isn't being honest with their investors. Michael Saylor is not being essentially honest with or transparent with their investors, and their investor felt that they were essentially misled by MicroStrategy on their Bitcoin acquisitions. And then MicroStrategy gets sued, and there's a class action lawsuit on the table. All of a sudden, MicroStrategy stops buying Bitcoin. Coincidence or coordinated, time will tell on that matter. But yep, MicroStrategy has stopped buying. And also a lot of people are complaining now that MicroStrategy might be stuck in some sort of a loop cycle where they can't stop buying Bitcoin. And interesting enough, it's also what we talked about on this live. Essentially, I think it was on Thursday's live or Wednesday's live that we talked about on this live, where we said MicroStrategy seems like it's just stuck in a loop cycle where they're just buying Bitcoin because if they, they're buying Bitcoin so their stock goes up. But if Bitcoin goes down, then they take a massive L on essentially their stock prices, which is bad for their investors. If they sell their Bitcoin to save their stock price, then people, essentially their investors, will be angry at them even more because they're selling their Bitcoins, which is their stocks even lower. MicroStrategy is just stuck, completely stuck on where he's standing right now. And he's going in a loop cycle is what most people are saying also regarding MicroStrategy right now. Okay. Moving on from MicroStrategy's recent filings that they have purchased 0 Bitcoin. To Morgan Stanley. Now, a lot of people and a lot of institutions, analysts, researchers have come out with their perspectives on this whole tariff situation with the United States and the rest of the world. So here is where Morgan Stanley essentially stands. Morgan Stanley's analysts have come out and they've, given their own perception of what's possibly going to be happening. So Morgan Stanley warns of tariff policy impacts on the market right now. Morgan Stanley, led by Michael, released essentially a report on today addressing potential scenarios with US tariff policies affecting markets globally. Analysis by essentially Morgan Stanley outlined risk of US tariff policies to GDP growth. Essentially. Potential scenarios could lead to increased market volatility, impacting traditional markets and cryptocurrency assets. Michael Zero's report, a prominent analysis from Morgan Stanley, outlines that there are 3 primary scenarios for US tariff policies. The report suggests that the US might extend tariff suspension, induce tactical escalation, or pursue a mild tariff agreement. Such discussions are influenced by ongoing trade negotiations. The implications of these scenarios include potential increases in tariff rates affecting inflation and economic growth. Morgan Stanley's research notes tariff policies remains a key variable essentially in the markets, and an aggressive essentially tariff path could push the downside risk to the economic outlooks and affect the GDP growth expectations for 2025 and 2026. These changes could also influence investor sentiments and broader essentially financial markets, impacting trading strategies and risk appetite inside the market space. Market reactions also remain speculative, with analysts and stakeholders closely monitoring updates, while the Federal Reserve may adjust monetary policies based on tariffs, including inflation. Industry essential leaders and emphasize the need for proactive risk management in prevailing uncertainties. Insights suggest that any aggressive tariff approaches could essentially delay rate cuts by the Federal Reserve, emphasizing the importance of closely monitoring these policy shifts. Michael, the US chief economist from Morgan Stanley, explains that tariff-induced inflation will keep the Fed on the sidelines. As a result, Morgan Stanley researcher is no longer anticipating a June rate cut. Tariff essentially rates are raising much more quickly than we anticipated. Such strategies have historically led to increased market turbulence, affecting GDP outlooks and contributing to varied inflation trends. So, Morgan Stanley's analyst presumes that, one, we're not going to be getting rate cuts in June because of the whole tariff situations, and two, the market is on edge because of the tariff situations right now, and we just don't know what it's going to be. They've laid out three outcomes of what could possibly happen with Trump's administrations on tariffs. We should be expecting something, according to Scott Benson, in the next 48 hours on tariffs. Where we stand, is a pause, is it continued? Does it just have that deadline they said, essentially on 1st of August, where only Japan and South Korea get the increase on tariffs and the rest of the world doesn't for some reason? So we have to see what happens in the next 48 hours to have a better idea of where the market stands. But all of this is temporary. Remember, tariffs are temporarily on the market space. We should be looking at is the longer outcome. Now, SEC is what we're going to talk about next. Moving on from essentially tariffs and Morgan Stanley's opinions on that matter to the SEC. But before we talk about the SEC, let's go inside the comment section first, and then we go straight into the SEC news. As I said previously, this is live, which means we do have questions or even statements to make. Put them down inside the comment section. More than happy to help you out. So let's go inside the comment section first, and then we go straight into the tariff situation. T, hello Miles, good to see you. T, how you doing? How you been? Carol, hello Miles and CMF. Carol, good to see you. How you doing? How you been? George, hi Miles and CMF, good to see you. How you doing? George, how you been? What else? Hello Miles. JP says, what do you have to say regarding? What do I have to say? JP, good to see you, brother. How you doing? Even Miles and CMF, Semper, good to see you. How you doing? How you been? When you think Jerome Powell will do rate cuts? Well, according to Morgan Stanley, it's not, essentially it wasn't going to be in June, and it's not going to be in July is what they think. It's just because the Fed won't do rate cuts because of tariffs, because the Fed says the tariff situation makes it, not a stable ground for rate cuts to be happening. But according to other analysts, much more higher up analysts, that it's just an absolute load of nonsense. And even a former World Bank essentially chairman came out and said that Jerome Powell is absolutely talking nonsense. He can do rate cuts if he wants to, he just doesn't, because he has essentially of the spite that's going on with Donald Trump. But we have to see, honestly, regarding tariffs, we should be expecting tariffs. We should have had tariffs already this year, a few more, but we only had one right before the election, and it just pretty much stopped because of the situation. But it's two things can happen in my point of view. One, Jerome Powell comes to his senses and does rate cuts, or two, Trump's administration finds a way to make Jerome Powell quit so they can replace him, so we can have rate cuts. That's the only two options. It's either Jerome Powell comes to his senses and decides to do rate cuts, or he has to get fired for rate cuts to happen. It's the whole Gary Gensler situation again, where it's either Gary Gensler comes to his senses and stops suing the crypto companies for no apparent reason, or Gary Gensler gets fired. And it had to come to Gary Gensler gets fired for the crypto market to move on. Well, the same scenario is playing out here. It's either Jerome Powell comes to his senses and essentially does rate cuts, or he has to get fired for rate cuts to happen. We have to see how it plays out. Now, SEC. Some new data has come out regarding ETFs. When we should be expecting ETFs, within what time frame we should be expecting ETFs to happen. So the SEC has from now until October 10th to approve or deny altcoin ETFs. The US Securities Exchange Commission, SEC, is pushing towards altcoin, essentially ETFs, especially essentially for projects like XRP, Solana, and so on, because these are the ones that have the most amount of ETF application filings. In a clear sign of its evolving stance, the SEC has also asked issuers to amend their refile their S1 applications for their spot ETFs by the end of July. This deadline aligns with a faster and more structured approval process. The SEC has until October 10th to approve or deny such a fund, according to reports. The SEC wants to accelerate the process and approve one or more of their funds way ahead of their deadline. The first public message from the SEC about these possible products was made in June. The regulation entity essentially included language for in-kind redemptions and the creation as well as staking. The filings were made by the Canary, essentially majority of Solana ETFs, ETF shares, core Solana ETF, Bitwise Solana ETF, and among others, or XRP ETFs or HBAR ETFs and so on. According to the reports, the SEC has no plans to wait for the approvals until October. This follows the Rex shares product that got approved last week. The stance essentially is uprising and following the Trump crypto stance and his involvements in the industry. The SEC has historically been careful to avoid giving one issuer a first mover advantage in the cryptocurrency ETF space. When Bitcoin and Ethereum ETFs were greenlit, the commission synchronized approvals across the multiple filers to level the playing field. Now the SSK has essentially had a head start. Other Solana ETF applicants demand equal footing, and the SEC appears to be listening. SSK started trading last week, become the first Solana staking fund on the market. This gave it the first mover advantage over potential remaining Solana ETFs. The commission had no choice but to greenlight it. Essentially, it files under the Investment Company Act of 1940 and therefore received an automatic approval unless stopped by the SEC. At the start, it saw $33 million worth of trades and $12 million in inflows. This essentially was marked as a healthy start to trading by Bloomberg ETF analyst James. He observed that it had seen $8 million in trading volume in the first 20 minutes. If the Solana ETFs are essentially approved in August or September, as some expect, that could trigger a second wave of crypto FOMOs in the traditional essentially markets. And the spot market essentially and the spot Solana ETFs would be the third kind of spot crypto funds on the US market after the approval of the spot Ethereum and Bitcoin funds. Other essentially outstanding applications include funds tracking the price of XRP, Dogecoin, and Litecoin, among others. The second most anticipated essentially ETF was the ETF for XRP ETF. However, Nate Gracie's president of ETF Store says that BlackRock might change its mind about not going after other crypto ETFs besides Bitcoin and Ethereum once the SEC case against Ripple is over. Gracie's remarks came after Ripple CEO Brad Garlinghouse said that the firm was dropping its cross appeals in the SEC. The company thought that the SEC would also drop its appeal, ending the long essentially called drama, while BlackRock has yet to throw its hat in the ring to launch an XRP ETF. At least 7 applications from issuers like Bitwise, Carney Capital, Franklin Templeton, and Grayscale are sitting at the regulator's desk, according to Bloomberg senior ETF analyst James. The SEC has from now until October 10th to approve some ETFs or all ETFs or non-ETFs. The chances of the SEC approving no ETFs whatsoever is 0. They have to approve ETFs in one way or another, because now we're living in a pro-crypto, essentially SEC, pro-crypto Trump administration. America become the capital of cryptocurrencies. We have the crypto week coming up on July 4th, where it's going to be about the Clarity Act, the Genius Act, and other regulations for the crypto space. And then 22nd of July, we have the crypto White House report coming out. So there's a lot of crypto this, and crypto that happening inside the United States, which means the SEC has to approve something or everything when it comes to ETFs. Now, moving on from the SEC news to a Spanish bank. But before we talk about the Spanish bank, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or statements to make, put it down inside the comment section. More than happy to help you out. So let's see where we're at inside the comment section and go straight into the banking news next. 2026, we will see some move regarding the market space in general. Yes, 2025, we've seen a lot of things happen. 2025, 2026, a lot more things happen. As years go by, we get better and better. Where should I start crypto? I'm a complete beginner. Can you explain some basics? If you want to learn about cryptocurrencies completely for free, you can go to Google and type in coinmove.one, or just type in coinmove. It'll be the first website on Google. The first website on Google. If you type in coinmove in the search bar, and then you click on that first website that comes up on Google, and then you go to the crypto learn section. and it's free. Everything you need to know about cryptocurrencies from start to end, it's free, it's basic. And how I know essentially it's free, how I know it's very easy to learn from this, because it's my company. I essentially set up a page on my own company website where everybody can go and learn about cryptocurrencies completely for free, for life. It doesn't cost you a single penny, just your time to read and learn. So you can go there. Hope that helps. Hello, Miles and CMF. Anna, good to see you. How you doing? How you been? Good evening, Miles and CMF. Orphan, good to see you. How you doing? How you been? Hi, Miles and family. Alex, good to see you. How you doing? How you been? Bitcoin to 300,000, Mr. 15,000. That's why STR, how he shows BTC holdings 100,000 and gets $1 billion loan, 0.1%. I don't know who this person is, but he's all over the place. We're stuck with Jerome Powell until this time runs out. The president can't fire him as a private entity. It's true, the president cannot fire essentially Jerome Powell, but there are maybe legal ways in a way where he can remove him from a position of power. Now, essentially what the Trump administration has said is that they're looking into it through a Supreme Court type of situation where maybe they can essentially force his hand and remove him from his position. But there's also the other situation that's happening where it's about $2.5 billion of misled funds that's been going on in the Fed, and which essentially falls on top of Jerome Powell's head. So if that $2.5 billion situation isn't resolved, then maybe that could be the scenario that essentially forces Jerome Powell to quit or resign from his position, because then he doesn't have the answer for the $2.6 or $2.5 billion of misled funds, because it will just disappear from the news. That's just how things work in politics. Now, good evening, Miles. If MicroStrategy struggles, that means every buyer of Bitcoin is struggling. Is stranded or strangled. In other hands, CZ just go around and encourage governments and everybody to buy BTC. It is what's happening. CZ has went around and essentially encouraged a lot of governments to buy him. He encouraged Kazakhstan's government to create a Bitcoin essentially reserve, which they did, and essentially they're going to be creating some sort of Bitcoin city, which should be in the plans for that country. So yes, Michael Saylor is not the only one that goes around and tells countries to create some sort of Bitcoin reserve. CZ does that as well. But yes, if Michael Saylor's company's strategy decides to sell their Bitcoin for some oddly reason, maybe because they're stuck in a loop cycle, then yes, it's definitely going to put a massive weight on Bitcoin holders. It's definitely going to cause massive red flags all over the market space, where a lot of people will start selling, because it is a big company. It's going to raise a lot of red flags at the same time. Funky Brother says, Miles, why are SEC not dropping the cross appeal? I think they're just waiting for the perfect time. It always just goes back to the two scenarios. The two scenarios of Ripple's case has always been, the first scenario for Ripple's situation has always been regarding timing. That essentially Ripple is all about the timing of how the market is going to be structured, where essentially the world's going to be aligned, and then essentially the Ripple case situation ends, and essentially the market starts booming, Ripple enters the financial systems, and so on. That's always been scenario number one. Scenario number two has always been the other section, where it's essentially where Ripple was being pushed out by some sort of crypto mafia group. And what I mean by that is what essentially the founder of Cardano said, where it's nice to see that essentially Ripple going for an acquisition of Circle, in Cardano's founder's words, because that will essentially stop the crypto mafia situation that's going on in the United States. Not my words, Cardano's founder's words. So the other scenario for Ripple has always been that Ripple was being pushed out because of what it's capable of doing towards the financial sector, which is changing the entire playing field and taking power away from banks and giving it to fintech companies, like a company like Ripple, where for the longest time banks have had the last word. JP Morgan, banks like JP Morgan for the longest time have had the last word, where essentially they're the loudest voice in the room, because the world the world was very reliant on a banking system where we can use our MasterCards or Visa cards and so on, or essentially Apple Pay, Google Pay, Samsung Pay, and so on, which was, again, we're relying on our bank accounts to connect to these payment systems. But then here comes along Ripple day one, changing the entire game. And it's always been another outcome where it was always in my head, where essentially banks like JP Morgan could have been behind the push that Gary Gensler was getting to go after a company like Ripple, because Ripple gets sued essentially by the SEC through Gary Gensler, And at that period of time, JP Morgan starts designing their own financial digital system, even though they hated cryptocurrencies. So, and then now you fast forward to, essentially 2025, where Ripple is applying for its own banking license, not going public, so they don't lose control of their company. Ripple is not essentially, coming into the playing fields, trying to play nice with everybody. They're coming in for a takeover. And some banks may not like that, and some institutions may not like that, but it does seem like Ripple is winning. It might not seem like it because the case has been going on for a long time, but it does seem like Ripple's winning with the amount of acquisitions they've made worldwide, the amount of licensings they have worldwide. The only place they're setting their foot in right now is the United States, but the rest of the world is pretty much a Ripple's palm. Now, good evening, Miles and CMF. Good to see you as well, Mike. How you doing? How you been? So here it is. BBVA is what we're going to talk about next. The leading Spanish bank, on the topic of banks, launches a Bitcoin and Ethereum service for Spanish users. BBVA, a leading Spanish bank, has announced the launch of a Bitcoin and Ethereum trading services for retail customers in Spain, available via the bank's mobile app. This development represents a significant expansion of BBVA's crypto services, aligning with European, essentially MiCA regulations for enhanced customer access to digital assets. BBVA has extended its cryptocurrency trading and custody services to trade Bitcoin and Ethereum through their mobile apps. Service compliance essentially with MiCA regulations and marks the BBVA's third country expansion essentially after initiatives in Switzerland and Turkey. The BBVA's initiative introduces a new frontier for essentially for retail investors in Spain to access Bitcoin and Ethereum. The integration of crypto trading functions are essentially for very well-established banking applications may reshape digital assets accessibility. It is likely to influence other banks to consider similar services. Market reactions remain measured with no significant essential remarks from prominent crypto personalities. As of July 7th, BBVA's executives, however, underscored their commitment to seamless connections between traditional banking and digital assets under European regulatory standards. In 2021, BBVA launched its first crypto services in Switzerland, showcasing a forward-focused approach to digital banking, now echoed in Spain. Research teams essentially suggest that BBVA could move essentially and prompt further growth in European retail crypto markets. By offering these services, BBVA not only helps to mainstream digital asset adoption, but also set a precedent for regulatory compliance in financial sectors. So BBVA, one of the leading Spanish banks, has opened its doors to Bitcoin and Ethereum, essentially crypto services for Spanish users. They've already opened their doors to Switzerland users and Turkish users, and now they've opened their doors to Spanish users for cryptocurrencies. And Dina Sims says, I agree with you. Let's go, Dina Sims. Thank you for agreeing with me. Welcome to CMF Live. Mike says, good evening, Miles and CMF. And Susie says, good evening, Miles and CMF. Susie and Mike, good to see you. How you doing? How you been? Now, moving on from the BBVA Spanish bank to another company that's decided to jump on essentially the Bitcoin bandwagon to advance its stock price. And what I mean by that is it's a trend that's going on right now, a trend where failing companies, or even essentially, companies that are doing pretty well for themselves on the stock market, jump on the Bitcoin bandwagon to push up their stock prices by telling their investors they're becoming some sort of Bitcoin or creating a Bitcoin treasury company. So here it is. Monaro Global Investments PLC, listed on the Nasdaq under the ticker MRNO, has taken a bold leap in incorporating Bitcoin into its corporate treasury strategy. The real estate and hospitality essentially company has already acquired 21 Bitcoins as a part of its initial steps in adopting this digital asset approach. This essentially move positions Monaro's among a growing number of publicly traded companies that view Bitcoin as a reserve asset. To further support this Bitcoin strategy, Monaro has entered into a standby equity purchase agreement with Yorkshire Ville Advisors, allowing it to raise up to $500 million. The company plans to use the large portion of these funds to increase its Bitcoin holdings over time, and the substantial financial commitments highlights the company's confidence in Bitcoin's long-term value proposition. The strategy is not just about holding Bitcoin, it aligns with Monaro's broader vision to modernize its financial operations and embrace digital innovations. Moreno's core businesses in real estate and hospitality remain central to its operations. However, it now plans to enhance these sectors through integration of Bitcoin-related initiatives, asset monetization, hospitality essential innovation, and capital efficiency. With changes in accounting standards making it easier for companies to hold Bitcoin on their balance sheets, Monero is seizing its opportunity to diversify and strengthen its financial position. Too many companies are coming out the woodworks, public companies, and creating some sort of Bitcoin strategy because it's a good way for them to boost up their company image and boost up their stock prices. Only a few companies that didn't work out for, but the majority of companies that have jumped on the Bitcoin bandwagon of creating a Bitcoin reserve, it's helped their stock prices climb because investors are seeing them as, innovation strategy and so on and so on. But if you just wanted a Bitcoin company, you could have just went for essentially MicroStrategy, but that could also be, the difference in stock price. Now, I want to share with you, moving on from the other company that's jumping the bandwagon, to 5 countries that you could potentially move to if you're inside the cryptocurrency world. The question that I, sometimes get asked, or most of the times get asked, it could be through a message, it could be through a phone call with a member of the CMF, or it could even be online on social media, where people always ask, let's say cryptocurrencies, reach the prices you want, no matter what you're holding. If you're holding XRP, XLM, XDC, or essentially HBAR, Solana, Bitcoin, Ethereum, Cardano, whatever you're holding, let's say it reaches the prices you want. What's your next move if you want to move country? So Cointelegraph came up with a report of what they think essentially is the top 5 countries people should look into if they're inside the crypto space. If you want to, for example, retire somewhere after you've made your crypto money, or even now, you're thinking about your retirement plans now, you want to plan ahead. Once crypto reaches the prices you want, once your portfolio reaches the prices you want, maybe you want to plan ahead starting now. So maybe these are some countries you could look into when that happens. So Cointelegraph did a report, 5 top countries. Here they are. 5 countries where crypto essentially is surprisingly tax-free in 2025. As crypto adoption essentially explodes, so does the scrutiny from tax authorities. However, not every country is clamping down. In fact, a few forward-thinking jurisdictions are buckling up their trend, essentially offering complete tax freedom on crypto gains. For anyone wondering where crypto essentially is tax-free in 2025, these crypto tax-free countries have become havens for traders long-term and Bitcoin holders and digital asset entrepreneurs alike. Whether you're managing a decentralized financial essentially portfolio or planning your offshore relocation, or even simply looking to live a tax-free with crypto, understanding the best cryptocurrency tax-free jurisdictions for 2025 could unlock serious financial advantages. From Caribbean islands to the Middle East and even some unexpected parts of Europe, these destinations are rewriting the rulebooks. I'll be honest, one of these countries surprised the hell out of me when it said essentially parts of Europe. So here is the first country you could locate to if you want to essentially later on in life relocate due to your cryptocurrency essentially earnings. The Cayman Islands. The Cayman Islands live tax-free with crypto if you're seeking a true digital asset tax-free zone. The Cayman Islands should be at the top of your list. The classic offshore, essentially financial center, imposes no personal income tax, capital gains tax, or corporate tax. And yes, that includes cryptocurrencies. Whether you're trading essentially crypto, Bitcoin, holding long-term, or managing a DeFi treasury, your gains are still untouched. 0% tax on cryptocurrencies. For those concerned about regulations, Cayman's also delivers the updated Virtual Asset Service Providers Act with a fully operational licensing regime from April 2025 and gives their country a clear and compliant framework. This means that essentially exchanges, custodians, and other platforms can operate legally and essentially standards aligned with the global norms. Number 2. The United Arab Emirates, which was a clear choice for a lot of people. Tax-free crypto zones, the United Arab Emirates continues to cement its essentially place as one of the most crypto-friendly countries in 2025. So if anybody ever wants to move across all 7 Emirates, including Dubai, Abu Dhabi, individuals pay 0 tax on crypto trading, staking, mining, or even selling. It's a full spectrum crypto tax haven with no personal income tax and no capital gains tax on digital assets. Moreover, the appeal essentially goes beyond tax policies with dedicated crypto regulators such as Dubai's Virtual Asset Regulatory Authority, Dubai's Financial Services Authority, Dubai's International Financial Center, and the Financial Services Regulatory Authority of Abu Dhabi's market spaces. And the UAE offers regulatory clarity for startups, VCs, and major players alike, whether you're minting non-fungible tokens, in other words NFTs, or even building layer 1 protocols. Is a clear licensing path and essentially is an attractive visa options, world-class infrastructure, and offshore crypto tax benefits when you become a UAE essentially citizen. Number 3 is El Salvador. Bitcoin tax haven El Salvador. When El Salvador declared Bitcoin's legal tender back in 2021, it sent shockwaves across the financial world. Fast forward to 2025, and this small Central American nation still ranks among the most radical Bitcoin tax havens on the planet. Thanks to its digital asset law, there's 0 capital gains or income tax on Bitcoin transactions, whether you're trading essentially or holding or spending it via the Lightning Wallet's essentially Chivo. It's one of the few crypto tax-free countries in 2025 where the promise still holds, especially for long-term investors. Remember that El Salvador is building Bitcoin City also, and crypto essentially, and a crypto city along. In general, a crypto city with no income, property, or capital gains taxes, an emerging tax-free crypto zone designed for miners, startups, and digital nomads alike. The 4th one was a surprising one on the list. Germany. Germany, crypto-friendly country. Germany may not scream as tax haven, but for long-term crypto holders, is quietly one of the most crypto-friendly countries in 2025. Here is why. If you hold your Bitcoin or other digital assets for over 12 months, any sales, swaps, or even everyday use is completely tax-free. That's right. Germany treats long-term crypto as private assets, not a speculative one. It's one of the rare crypto essentially tax loopholes in the country where holding equals exemptions. Even for short-term trades, there is a relief. If your total gains for the year stay under 1,000 euros, you owe nothing, no filing required. Only gains above the threshold get taxed, and only if you sold before the 1-year mark. In a high tax nation like Germany, this sets up surprisingly generous. If you're essentially a disciplined holder or even a digital asset investor, Germany may be one of the best low crypto tax nations in 2025. That is a very, very, very surprising one regarding Germany. But again, Germany's laws are a bit vague. Germany still has to abide by the EU. So let's just say essentially the European Central Bank, Christian Lagarde, the president of the European Central Bank, one day decides to wake up and pressure the European countries to abide by a certain crypto law, then Germany will have no choice but to abide by it. For now, Germany might seem like an open door country for cryptocurrencies. If you hold your cryptocurrencies and don't sell them for 12 months and then essentially you're tax-free after that, over time that will probably change because, well, Germany doesn't really have a voice. It does have a voice, but if the European Central Bank's essentially president says something, then Germany, France, Italy, even though Italy sometimes doesn't listen, but Germany, France, Italy, and Spain pretty much lead the European market spaces, and they have no choice but to listen to the European Central Bank. But for now, Germany's doors are open. The 5th country is Portugal. Country with 0 crypto tax. Still a strong contender on any list of countries. With 0 crypto tax, Portugal offers a unique mix of sun, surf, and tax savings for assets held longer than 365 days. Crypto capital gains are fully exempt, making it one of the top cryptocurrency tax-free jurisdictions in Europe. The appeal essentially is even greater for those who are qualified under the non-essential habitual residence program before the March 31st, 2025. Under the NHR, most foreign source crypto tax incomes is tax exempt, and domestic income is taxed at just 20%. However, the landscape isn't entirely tax-free. Short game, essentially short-term gains under a year, are now taxed at 28%, and income from essentially staking or businesses likely like activity is also taxed. And still, for the long horizon, investors and retirees seeking crypto tax reliefs, Portugal remains one of the most attractive digital asset tax-free safe zones. And it's no surprise that Portugal continues to attract remote workers and essentially crypto expats looking to relocate for their crypto tax savings. Just want to add another country in that list. Monaco. Monaco is a very great place for you to be in. It's safe, it's essentially reliable, it's great for networking if you want to be in that space, and also it's tax-free. Monaco, in my opinion, should be top 3 places if you do want to relocate somewhere down the line. It's a beautiful country, very safe country, and it's tax-free. Why not? Now, on the topic of the European Central Bank, Europe's MiCA framework gains traction over essentially 50 crypto firms securing licensings. That is tremendous. But before we talk about that, let's go inside the comment section first. As I said previously, this is essentially live, which means if you do have any questions or statements to make, put it down in the comment section. More than happy to help you out. So let's go inside the comment section first before we talk about the European Central Bank. And let's see where we were at. We were at here. Greetings, Miles, the CMF. Ray, good to see you, brother. How you doing? How you been? The president can fire drum pull. Let's go, Christopher. JP says, hey, guys, just a little update. I will be taking 3 months of X social media. Don't worry, I'm good. It's just for me. Love you all. Thank you, Miles. Love you. JP, what's happening? You're taking, hey guys, just a little update. I'm taking 3 months of X social media. Don't worry, I'm good. It's just for me. Love you all. Thank you, Miles. Love you. Why? JP, why are you taking 3 months off from X? I've got my notepad out for the 5 countries. Let's go, Susie. Orphan says, this means you actually need to live in one of those for 1 year. Yes, it does. Or you need to buy your residency and it's not cheap. Yes, that's true also. Now, EU, European Central Bank, or MiCA regulations. The EU's MiCA framework has gained traction as over essentially 50 crypto firms secure licensings. Before I read out the next news, inside the comment section, I haven't asked questions for a long time from CMF members. Inside the comment section, while I'm reading you the next news, inside the comment section, just out of curiosity, everybody put which country you would want to move to once your portfolio reaches the valuation you want it to reach. Don't share how much is inside your portfolio or how much money you want before you can move. Just out of curiosity, inside the comment section, everybody write which country you would move to when you have enough money made from cryptocurrency. Let's say the bull market is happening. You've made a lot of money from crypto. Which country are you moving to? Everybody put which country you would move to inside the comment section. If you want to stay where you are, just say, I will stay where I am, for example. If you live, for example, in Sardinia, let's say, and you could just say, I'll stay in Sardinia. But just out of curiosity, everybody put which country you would move to when your numbers hit. While I read you the next news. Europe's MiCA framework gains traction as of over 50 crypto firms secure licensing. According to Circle's executives, Patrick, who cited fresh figures from the European Securities Exchange Commission Markets Authority from today, a total of 53 entities have now obtained MiCA licenses, and this regulatory approval allows them to offer crypto services through the entire European Economic Area without needing to apply for permission in each country individually, a process known as passporting, essentially. The license marks a turning point for the EU's digital asset oversight. Among the most impactful developments is the rise of authorized stablecoins issuers. 14 firms, including Circle, Crypto.com, Stable Mint, and French banking giant Societe Generale, have cleared to issue their essential fiat-backed stablecoins and e-money tokens, and their offerings span from 20 different stablecoins, and most essentially pegged to the euros. Notably, absence is Tether. Obviously, Tether never got a green light from the EU. Beyond stablecoins, MiC's essentially reach extends to crypto trading platforms and service providers. A total of 39 companies have gained regulatory approval, with the majority of licenses issued in Germany, Netherlands, Malta, and France. These include a mix of fintech firms, traditional banks, and major exchanges like Coinbase, Kraken, OKX, and Robinhood. Binance, the world's largest cryptocurrency exchange, is still awaiting approval, but recently appointed a new executive to essentially spearhead this regulatory push in Europe. I'll be honest, as the MiC rollout accelerates, the framework is quickly establishing the EU as the regulatory leader in the global crypto systems and spaces, providing clear rules and broader essentially access for compliant firms while tightening oversight or unlicensed players. Just want to point out the EU has done tremendous work when it comes to crypto regulations. 50 crypto companies so far have got fully licensed by the EU, which is incredible to see, the world shifting, adjusting to a digital world. And the EU is certainly, doing that 100%. It's done more than the UK has. The UK government is still stuck on what is a cryptocurrency. Now, before we talk about the next news, let's go inside the comment section first, and then we go straight into the next news. So I want to see which country everybody would choose to move to if they had the option. I wouldn't touch El Salvador. UK is the worst country to live in regard to crypto taxes. Gibraltar. Okay, Joe. Kerry says Cayman Islands. Okay, Cayman Islands is a very nice place. Cayman Islands or Portugal. Says Susie. Christopher says, I'd love Dubai, but I'm not sure about the Islamic law. Fair enough, Christopher. Anna says Portugal or Monaco. Both brilliant choices. Free Favor says, I've been to the Caymans and it's absolutely beautiful. That's one, but also Portugal. Okay, Free Favor. Mike says Cayman Islands or Portugal. Fair enough. Khan says Jamaica. Okay. Shelly says, depending on regulations as time goes on, where the best deal is for me. Fair enough, Shelly. BullXRP says neighbor to Ronaldo. BullXRP wants to be Ronaldo's neighbor, so I'm guessing Saudi Arabia is where you want to live. Okay. Carol says, I will stay in the US. Fair enough, Carol. Funky Butter says USA, as I only hold American coins, so there will not be any taxes to pay on XRP. It's a good, fair point. Pablo says, country hop, I'll buy a jet and live in the sky. I like these plans. I like these plans. They're interesting. They're not the same. Funky Butter says, I just pray that XRP does move as it's the most pressed cryptocurrency. Fair enough, Funky Butter. It will. Orphan says, I would like Portugal. The only thing that I'm concerned is EU thinking to freeze your money to take them and use them for wrong reasons. Okay, Orphan, fair enough. Dina says, Cayman Islands or Monaco. Fair enough. Kali says, in my opinion, in the future, non-crypto tax-free countries will exist, unless just a few of them. As we know, with the CBDCs, we couldn't invest. Fair enough. That's facts, yeah. Funky Brother says, maybe to Doha as the most safest place in the world. Fair enough. Everybody has very different plans. It's interesting. Very different plans. On the topic of CBDCs, though, Hi, Miles. When XRP going to 20,000? Johnny, first we're going to drop the lawsuit, then the regulations, and then we'll talk about the price. European Central Bank has said something very interesting. A while ago, about 2 years ago, we were discussing on this live show how I said, if you want to look at where your country is headed, I said, look at China. About 2 years ago, I said to everybody, if you want to look at where your country is headed in this digital world, I said, look at China. I said, China is the first country with CBDCs, essentially a wallet that connects to essentially a CBDC wallet that essentially is programmable, can be frozen your money and so on, social credit systems, and a lot of other things that essentially comes in that manner. Well, the European Central Bank today has confirmed that the digital euros will mirror the Chinese CBDC model. The European Central Bank President, Christian Lagarde, has emphasized that the digital currency will be developed to serve all citizens equally, mirroring China's focus on accessibility and widespread usability. Strange use of words there, but all they're saying essentially is that the European CBDC is going to be exactly the same as the Chinese CBDC, which is a retail CBDC, a wholesale CBDC, and a social credit system wallet that attaches to your wallet. Essentially, that attaches to your money, your CBDC money, which is highly programmable, which means if you do certain things, they can freeze your accounts. I said this 2 years ago. I said, if you want to see where your country is headed, look at China. And you fast forward to 2025 on July 7th, where the European Central Bank's president is coming out and saying, our European CBDC is going to be exactly the same as the Chinese CBDC. As a part of Europe's broader move into digital currency race, the European Central Bank is taking cues from China's mass essentially adoption success. The digital yuan has already reached millions across key sectors in China, particularly small businesses and retail users. The European Central Bank sees this as a template for achieving similar scale and exclusivity across the Eurozone. Christian Lagarde reaffirmed that the digital euros is intended to be universal, not limited to the tech savvy. Instead, the aim is the system to integrate smoothly into everyday transactions while reinforcing Europe's global financial position. Beyond domestic use, the European Central Bank views the digital euro as a strict tool to reduce Europe's dependency on essentially US dollars and strengthen the EU's presence in international finance. Close cooperations with China's central bank has already informed parts of the European Central Bank's planning process. While consultations and pilot testing continues, the European Central Bank remains committed to ensuring the digital euro's compliance. Now, existing cash systems, key concerns like privacy, fairness, and accessibility remain central to its design. By aligning with China's proven essentially rollout strategies, the European Central Bank is signaling its intent to deliver a digital currency that is practical and exclusive and globally competitive. So, if you do live in the European essentially zone, in the EU in other words, expect a European CBDC that's exactly like the Chinese CBDC, which means it's programmable, connected to a social credit system later on in life. And if you do live outside the EU, you're also going to be getting the exact CBDC, essentially a wholesale CBDC, retail CBDC situation with a social credit system wallet. The world is going to be on that system. We're not heading towards a decentralized world. We're heading towards a centralized world with, here and there of decentralization. But the reality of it is we're heading towards a centralized world. We always were. It's just they made some people or a lot of people believe that decentralization was an option. And in reality, there's no such thing, because centralization is always going to be the key player. Decentralization will be here and there. Now, this is why you wanted to be in essentially a project that's going to be the backbone of this very controlled and centralized world. The Senate Committee is what we're going to talk about next, because the Senate Committee advances the digital asset regulations and their frameworks. So the Senate Banking Committee will hold a hearing on Wednesday to discuss and establish a regulatory framework for digital asset industries currently valued at $30 trillion. The hearing's significance lies in the potential for regulatory clarity, which could drive institutional essentially investments and market activity in the sector. The Senate Banking Committee aims to develop a regulatory framework for digital asset industries informed by the 2023 Luminous-Gillibrand Act and Clarity Act provision. Key senators, including Cynthia Luminous, Tim Scott, advocate for policies that balance innovation and consumer protection, and Senator Cynthia Luminous stated immediate implementations involve differentiating from securities and commodities within digital assets, potentially influencing liquidity and attracting institutional funds as market participants align with new regulations, and a draft proposal is expected soon. It is time for the US to catch up to the fintech innovation with clear policies and robust market structure. Our proposal incorporates responsible innovation and strong consumer protections, and community and industry leaders are closely monitoring their proceedings. Senator Tim Scott emphasized a shared regulatory approach aiming for innovation and investor protections. Signaling strict future directions and regulatory outcomes could redefine asset classifications. And the influence essentially trading behaviors. And the research notes that historical precedents for legislative movements increasing capital flows into compliance sectors, potentially impacting financial markets significantly. So, it seems like a lot of things are going to be happening this month in terms of regulations. We're going to be getting the week of crypto, which is starting essentially 14th of July, which is known as the week of crypto regulations by Trump. July 22nd is when we're going to get a White House report regarding cryptocurrencies. And this Wednesday coming up, we're going to get regarding the Clarity Act, where it's relatable to banks and cryptocurrencies, and if crypto is a commodity or securities or so on. This is definitely going to be seen as the month of crypto regulations by the looks of it. The faster we get regulations, the faster the market can move on to a much more better place, and also detaching from Bitcoin. Now, moving on from that particular report that's going to be coming out on Wednesday to XRP. The data has come out regarding XRP. But before we talk about that, let's go start a conversation first. As I said previously, this is live, which means if you do have any questions or even statements to make, put it down in the comment section. More than happy to help you out. So let's see where we're inside the comment section. We were at Alex's thing. Yeah, we were at here, Johnny. Then Alex. I would move to Dominican Republic. That's a good, great place as well. Move to the mountains. I hate people, says Johnny. What about yourself, Miles? Where would you like to retire? Where would I like to retire? Great question. For me, it's always, I think it's going to be Sardinia. Sardinia is always going to be where potentially I want to retire, because it's an island where most people live the longest because they live a very happy life. 2, it's known as a billionaire's playground. Sardinia's island is known as the billionaire playground. It's a very untouched island. It's a very secure island. It's a safe island. The people are amazing. The food is amazing. It's Italian. How could it go wrong? And it's also in the heart of Europe, you could pretty much say, because on top of the island is south of France, Monaco, and Italy. On the right side will also be Italy as well. On the left side, it's Spain, and below it, essentially, is Africa. So it's basically in the middle of everything. So for me, it's always going to be Sardinia by a mile, I think. No, I know. Saying that, I would also love to travel alongside essentially living in Sardinia. I would love to travel in other countries. I've done traveling quite a bit, but I've only traveled in Europe mostly. I've traveled all of Europe, and a little bit into the Middle East, and a little bit into Asia. But the other side, I haven't traveled yet. I haven't traveled to Canada, America, or South America. So that I will really like to travel to. Now, Miles, the main question is, where would you like to move to? That's where I would move to. Sardinia, I would say. What does XRP do for me in centralized world? What does XRP do for you in centralized world? Well, you have a voice. Not a really loud one, but you have still a voice in the CBDC world. In a centralized world, the aim isn't to control everyone. It's to control the peasants. And just to put in a category, everybody inside the retail section, including me, are peasants to people who run the show. People essentially who are the silent partners of centralized banks, or a part of the Bank of International Settlements, which is technically its own sovereignty also. Just like the essentially Bank of America, essentially just like Central London essentially is, part of its own sovereignty, or Washington DC is a part of its own sovereignty, or essentially the Vatican is its own sovereignty. The Bank of International Settlements is technically its own sovereignty as well, where they can move around tremendous amount of money off balance and so on, and put it on balance sheets, and they don't have to respond to anyone. They have their own police force. They have their own essentially parliamentary system. So the people that run the show essentially To those types of people, everybody inside the retail section is a peasant. So what is XRP going to do for you in a centralized world? Everything. Because you still have a voice in a centralized world with XRP, because it's a backbone of CBDCs. Some people would say, no, XRP is not the backbone of CBDCs. It's never going to be the backbone of CBDCs. Some people say the world will never go into CBDCs. The world's going to go towards stable coins and cryptocurrencies and decentralization. Those people live in la-la land. We don't live in a world of freedom of speech. We don't live in a world of human rights. I'll tell you why. A country like Iran gets awarded by the United Nations for humanitarian award. Iran's government got an award for being essentially, angels. Well, they torture their own people. We don't live in a world of essential freedom of speech. We don't live in a world of human rights. We live in a world of an illusion of having those things. So in a centralized world, you're going to essentially have some sort of power with a token by the name of XRP, because it is the backbone of a centralized world. And if you still believe it's not, and you still think it's never going to happen, well, only time will tell. But I'll tell you one thing. JP Morgan themselves said that they are scared. JP Morgan said that they're pretty much scared that essentially Circle or stable coins are not really going to be that dominant moving forward, and that CBDCs are going to be the dominant used currency around the world. That is the words of JP Morgan. Who out of every single crypto project around the world has always been behind CBDCs? Who was the first crypto company to create a CBDC platform? Who's the first crypto company to utilize a CBDC platform? Who's the first crypto company to get multiple awards for their CBDC platform? Ripple. What's their token? XRP. What's their ledger? XRP ledger. So in a CBDC world, that XRP token is going to be everything for you. So, and it just goes back to, the retail section as a whole, even including me, because I'm part of the retail section as well. The retail section in general are going to be like the peasants, and the upper scale people who run the show, like the Bank of International Settlements, the International Monetary Fund, or centralized banks, or even private and silent partners. They're not going to be controlling each other. They want to control us. So there needs to be tokens that they can use that's going to benefit them, and everybody else is going to be stuck on CBDCs. But if you're smart enough, you can catch the wave of whatever they're on, which is the XRP ledger, essentially is going to be later on. And then you could be on the same bandwagon as them. But that doesn't mean you can raise your voice later on in life either, because they'll just take it away from you. Now, before we talk about the next news, let's go inside the comment section first. Max says, easy Miles. Let's go, Mac. Good to see you. How you doing? How you been? Adi says, hi, Miles. I didn't quite catch what you said is happening with the banks in this Wednesday. Could you please repeat it? Cheers, mate. No problem, Adi. Adi, on this Wednesday coming up, the banks essentially, not the banks, but essentially two senators are coming together this Wednesday coming up to write and soon file in the Clarity Act, which is going to show essentially where cryptocurrencies stand. Are they going to be standing on the sides of securities or essentially commodities? So we have a better understanding essentially of what's coming ahead when it comes to cryptocurrencies, and crypto companies have a better idea as well. So this Wednesday, we're going to get some sort of report coming out on the Clarity Act of how far it's gone, and the filing should be very soon. Now, you should check out Jamaica and Africa, Miles. You would love it. Yeah, I need to go to a lot of places. I haven't been to a lot of countries still. I haven't been to Australia. I really want to go to Australia. I haven't been to Japan. I haven't been to Hong Kong, China, Russia, Thailand. I've never been to either. Bali, I've never been to. The only countries I've been to is in Europe. Germany, Austria, Switzerland, Italy, Monaco, France, Spain, Portugal. Like I've already Greece. Cyprus, Turkey, Georgia. Like, the only countries I've been to is all within Europe and a little bit in the Middle East, a little bit in Asia. But the rest of the world, I still haven't explored, and I would love to explore the rest of the world. So yeah, regarding Jamaica, yes, definitely. Africa, yes, definitely. I want to see. I want to see everything. Christopher says, Miles, when we make it, you're welcome to come and visit the Pacific Northwest. Let's go, Christopher. Thank you so much for that, brother. Shelly says, you should visit Australia. We have the best beaches here. Let's go, Shelly. Yes, definitely. I want to visit Australia as well, 100%. Shelly, you're right. Australia is the best place, says Johnny. Christopher says, I'd love to visit down under as well. Apparently, it looks like everyone wants to go to Australia. Kali says, invest now or never else. CBDCs is just like tomorrow. They would vanish our freedom. They'll finish our freedom. Yes, facts, honestly. Stormy says, hi, Miles CMF. I'm working, but listening. Let's go, Stormy. It's good to see you as well. Susie says, Turks and Cancel beaches are unreal as well. Yes, Susie, yeah, I really want to visit those islands as well. But Sardinia's beaches are also incredible as well. A lot of countries have a lot of amazing, essentially, destinations, a lot of beaches, and it's just unreal. There's a lot of countries I still need to see. Now, XRP. XRP has essentially, on the topic of XRP, Ripple's CEO to testify at the Senate hearing on crypto legislations. I'm guessing a lot of people have essentially seen the maybe a news article or post on X regarding Brad Garlinghouse, doing essentially some sort of hearing for crypto policy legislations. This is essentially incredibly very bullish news, because we've seen the people that get invited to essentially these types of events where they give some sort of speech on cryptocurrencies and so on. And the reason we had was essentially a particular crypto project's founder was essentially invited to the SEC to give some sort of a perspective on cryptocurrencies, because the SEC wanted a much more broader range of perspectives. So it's nice to see that Brad is going to be the one that gives the perspective on the Clarity Act, because that makes sense, because the Clarity Act is all about the gray sector, which is what are cryptocurrencies and where they stand. Is it securities? Is it commodities? And essentially, once that's sorted out, the banks can start utilizing it and keep it on their balance sheets, and so on. So can institutions. So the gray area vanishes almost with a Clarity Act. And the perfect person to speak honestly about that topic is Ripple's CEO, the company that's been essentially sued so much by the SEC for where their token stands or where their company stands. So, incredible pick. Ripple's CEO to testify at the Senate hearing on crypto legislations. Brad Garlinghouse, as Ripple's CEO, leads the efforts towards regulatory clarity, emphasizing the Clarity Act's potential benefits. Ripple has faced significant challenges with US regulators about XRP status. The hearing focuses on whether digital assets like XRP should be classified as securities or commodities, directly impacting entities like the SEC and the CFTC. Major industry players like Christian Smith and Jonathan Levin are also involved. The imminent hearing bears significant implications for XRP and broader crypto markets. Brad Garlinghouse has previously noted constructive crypto market structure legislations in the US is essentially imprimative and essentially in bringing in a new era of innovation and financial opportunities. While protecting consumers, a clear regulatory essentially opportunity, and while protecting consumers, a clear regulatory framework is believed to reduce uncertainties that previously affected these markets. Historically, major congressional testimonies involving the crypto sector have influenced asset volatility and market sentiments. The anticipated clarity in regulation could benefit consumers and spark innovation, as implied by Brad Garlinghouse's statements. Expert opinions stress the importance of addressing regulatory gaps to prevent further market disruptions and litigations. Past high-profile hearings triggered market volatility, which has anticipated for XRP and other digital assets. Official statements and market trends suggest potential for sweeping reforms in the US digital asset frameworks. The expected outcomes could influence global approaches to crypto regulation, setting a precedent for how digital assets are governed. The testimony may lead to more stable regulatory environments for XRP and related tokens, influencing investor confidence and market dynamics. Brad has been invited to give a perspective on the matter of crypto regulatory clarities. He's the perfect choice. All this time, CEOs after CEOs or founders of crypto companies were being invited to table discussions for the SEC and so on. But I think Brad got the better end of this stick, because he's going to be essentially testifying in front of at a hearing in front of the Senate to talk about crypto regulatory clarity, which is for the Clarity Act. The perfect choice of person to speak on this matter. This is why I say that Ripple, it may not seem like it to some people, but Ripple is actually winning against this whole crypto mafia situation that's going on. Now, let's go inside the comment section. Callie says, Miles, as you, I would like to retire in Sardinia, even in my graveyard. I've been there. I know what you mean. I know what you meant. Let's go, Callie. Joe says, once we get a digital ID, would that mean that if you have a dual nationality or two passports that you will lose one, so be left with just one digital passport? No. If you get another passport, depending on your jurisdictions, some don't like the idea of you being a dual nationality or you having a dual nationality. Let's say if you're a British citizen, they don't like the idea of you owning another nationality. And that applies to quite a few jurisdictions around the world. But the idea of a digital, essentially, ID, no, they don't really care about that. So you can have multiple nationalities if it's a digital ID, and you don't technically lose, essentially, your one digital passport. Happy Pisces, good to see you. How you doing? How you been? And you've also reached the endings of tonight's live. So that was the last news on tonight's live regarding essentially Ripple's CEO testifying in front of the Senate at a crypto hearing for legislations. Ripple's CEO doing a Senate hearing for crypto regulations is major, absolutely major. And also, just to give you a recap of what we talked about tonight's live regarding Ripple's CEO, we talked about the matters of crypto Ripple's CEO going from the Senate. We talked about also on tonight's live regarding the Senate committee advancing digital asset regulation frameworks. We talked about the European Central Bank coming out blatantly stating that, you know, Europe's digital CBDC is going to be exactly like the Chinese CBDC. We talked about the European financial essentially frameworks, how over 50 crypto companies now are approved essentially in Europe. We talked about 5 countries you could potentially move to in a essentially crypto tax haven world. We talked about another company that's just jumped on the Bitcoin bandwagon. We talked about a Spanish bank that's opened its doors to its citizens for Bitcoin and Ethereum essentially purchases for the retail section. We also went through news on tonight's live regarding the essentially how the SEC's timeline on crypto ETFs from now until October 10th. They have to approve crypto ETFs or essentially deny them all, which will look really bad for the SEC. We also talked about Morgan Stanley's perspectives on tariffs and their free policy or free outcomes they think is going to work out to. We talked about essentially MicroStrategy pausing their Bitcoin purchases due to their recent filings. We also went through news on tonight's live regarding the matters of BitGet's CEO talking about crypto pensions coming soon to the EU. We went through news regarding the White House, essentially the White House is going to soon be releasing a report on the first crypto policies July 22nd, 2025. We also went through news regarding the matters of US crypto tariff policies. So those are all the things we covered on tonight's live. This was episode 328 of the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time, where I share the most recent news in regards to cryptocurrency, CBDCs, AI, politics, regulations, and Web3. Everything you need to know about regarding going into this digital world and, you know, fully prepare for it. So tune to this live Monday to Friday, 10 p.m. London time. If you followed me during this live or subscribed to me during this live, depending on where you're watching from now, if you're watching on YouTube or X, thank you so much for following me or subscribing to me. And welcome to the CMF family. If you also liked and retweeted this live, thank you so much as well. Depending on if you're on YouTube, if you liked the live, and if you're on X, you liked and retweeted and put a comment outside of the live on YouTube or X. Thank you so much, CMF members. If you knew you did that as well, thank you so much. And CMF members, if you haven't liked or retweeted this live and you're watching this on X, like and retweet, put a comment outside. If you're watching this on essentially YouTube, just put a like and put a comment outside the live as well. Before we do go, let's go inside the comment section first, and then we'll call it a night. Night, Miles and CMF. Pablo, see you tomorrow same time as usual. I will listen to the playback. Let's go. Happy Pisces. See you tomorrow same time as usual, Pisces. Good night, Miles, and thanks for all you do. Let's go, Christopher. See you tomorrow about the same time as usual. Or for night, Miles and family. See you tomorrow. Let's see you tomorrow about the same time as usual. Thanks, Miles. Have a great night. See you tomorrow same time. Let's go, Autistic. See you tomorrow same time. Good night, Miles and CMF. Great news, Miles. See you tomorrow. Free and forever. See you tomorrow. Same time as usual as well. Good night, Miles and CMF. Mike. See you tomorrow, but the same time as usual. Night, Miles and everyone. This on this live show. Brilliant show as always. See you guys tomorrow. Joe. See you tomorrow. Same time as usual as well. I drove to the Ripple headquarters not too long ago, and it's the same building as the Bank of America. So it will be a bank soon. Let's go, Christopher, for the update. And see you tomorrow same time as usual. Thanks, Miles. Stormy, see you tomorrow same time as usual as well. Good night, Miles and CMF. Carol, see you tomorrow same time as usual as well. Thank you, Miles. Good night, Anna. See you tomorrow same time as usual as well. Have a great day and night. All much appreciated, Miles. Let's go, Shelly. See you tomorrow same time as usual as well. Love you all, Miles. Good night, Callie. See you tomorrow same time as usual. Night, everyone. Denise, see you tomorrow same time as usual as well. I will see everybody tomorrow, same timing as usual, 10 p.m. London time, for the next episode of CMF Live, for episode 329 tomorrow. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. CMF, see you tomorrow, same time as usual.